Wala na naman ang Facebook. Okay, good afternoon, everyone, or rather, good morning. All right, good morning, folks. So, welcome to another London Open trading session. Now, um, we find ourselves with a very interesting market. If I look at our charts, you'll see that earlier today, in after New York trade, pre-Tokyo trading, we saw the US dollar strengthening. Um, Basically, I would say across the board. You even saw gold gapping lower at the open of the trading day. And what was behind this? Well, again, this is all about Donald Trump. And President Trump basically said that he wasn't planning on firing Jerome Powell, the current chairman of the Federal Reserve. Now, folks, I have to point out that Jerome Powell actually was hired by Donald Trump during his first presidency. So it's interesting how there's been a big change in how he runs the government from his first presidency, from his first term, to how he runs things now. I guess people are saying that at least during the first Trump presidency, there were the people call it adults in the room, okay? Meaning there were people who were responsible enough, brave enough to actually stand up to President Trump whenever President Trump demands that things be done his way without following rules, without following tradition, without following law. So in this second term, as people put it, all of Trump's cabinets are, well, let's just say it what it is. They just kicks, yeah, they just kiss his ass. Okay, they're just bootlickers, and that's been one of the source of panic for financial markets. That there's no one in the administration that is willing to disagree with what the president says. Okay, having said that, what is there in store for us for today? Well, let's take a look at our calendar and see if there's anything to watch out for. So today is you actually have okay, you've got flash PMI figures for the Eurozone, the UK, the US. What are these? PMI is basically a survey of purchasing managers in the in both the manufacturing and services industry. The idea is they survey purchasing managers, they try to get a read on the level of business activity that purchasing managers are seeing. Are their factories buying a lot of raw materials? Are their factories getting a lot of orders? So this is what's called a leading indicator. They try to anticipate how the economy is going to turn out a few months from now by determining if the purchasing managers are seeing an increase in demand for their products, if the purchasing managers are seeing an increase in the stocks. okay, the precursor materials for whatever their products are. Now, PMI is a soft type of economic data. It doesn't really tell you how the economy is doing exactly, how much is it worth. It's a gauge on how things could turn out given the buying patterns, given the observations of the purchasing managers. Now, for today, we've got PMI in about 25 minutes. Okay, we'll have PMI out of France and Germany in 40 minutes time, and then you have the UK's in about an hour and 50 minutes. And then later at the open of the US market, you'll have the US numbers. Now, how do you read PMI? PMI is what's called a diffusion index. So any read that's above 50 is considered to be good. If the numbers are above 50, it's seen as indicative of expansion. Okay, so if the number is above 50 for PMI, okay, if the PMI numbers are above 50, that means that manufacturing is expanding, or it's a hint that manufacturing is expanding. If it's below 50, it says that okay, there's the potential for, or there is actually a slowdown in activity. What else should we know about your PMIs? Well, uh, today's release is not the final figure. Today we will be seeing the flash manufacturing and flash services PMI data. What does that mean? These are numbers that's based on incomplete data. So roughly 80 to 90% of the survey respondents should have submitted their responses by now, and that's what we're seeing later. Those are not the final numbers. So what are the expectations? Well, given that these surveys were done during a time of turmoil, when Trump was talking about tariffs and people were thinking there's going to be a slowdown in the global economy. Obviously, the consensus forecast for PMI numbers are mostly for a decline. Okay, so we're below 50. Whether you're talking manufacturing or services PMI, forecasts for Europe are below 50. The same thing for the US as far as manufacturing is concerned, although services is expected to read above 50. Now, we do expect that for developed economies like the US, like Germany, like the UK, your services PMI should be stronger than manufacturing. After all, these economies are very much more diverse than, say, something like um, China or a Vietnam. Okay, so there are really more services, or a big chunk of the economies for developed economies are about services. Okay, these are not just services like waiters or doctors, but these are services involving a lot of financial advisory services, a lot of the accounting services. So these are the types of uh, segments or sectors of the economy that's part of those services PMI. All right. So any other data that we should be aware of? Nothing really. So key numbers for today are your PMI numbers from Europe, UK, US. Now let's turn our sights into the charts and let's figure out if there's any trade that we can do. So let me take an across the board look. Um, so looks like after your earlier dollar rally, we actually spent the Asian session kind of unwinding those dollar gains. We are now staring at hammers, or you can even say dragonfly dojis in the case of cable. And we actually have the Aussie up for the day. All right, so looks like the knee-jerk response to what President Donald Trump has said is already over. Where do we start with our charts? Normally, I start with euro, but gold is a more interesting chart. So what do we have in gold, folks? If you look at it, we are coming from historical highs. So it's very difficult to figure out what could be pullback points for gold. Well, one thing that we can do is we can draw some Fibonacci retracements, and what does that tell me? We are currently testing 38.2 Fib retracement in gold. Um, Something very interesting for me is this. Look at this level here. That's 61.8 Fib retracement for gold. That places you at about 31.58. Working rate right now is at 32.91. Now gold is the kind of chart that at times could trade very tightly. Talk about $20 a day, and then at times could trade, could give you a very big range. So we have an ongoing pullback in gold. I guess the big question for us, will this pullback continue? Will we actually get to that 61.8 retracement level? Or is this actually going to be a capitulation, and are we going to go back below 3,000? Okay, let's find out. I tend to think that that's not going to go back below 3,000 anytime soon, simply because of who the president in the US is. There's always something unexpected when it comes to Mr. Trump. Now, okay, let me just go intraday, see what we've got from our charts. Very bearish for our candles, hourly charts, also dominated by big bearish candles. Okay, so I'm not gonna buy gold just yet. We are, however, at 38.2 Fib retracement level. Now, if you want to play things safe to me means that you have to go look for 61.8 Fib. That's a previous historic high. We actually had the nice rejection from that 31.58 level before. But how about now? Can I, there's so much room until that level that could we possibly just bounce from 38.2 Fib? Well, let me just play with the charts for a little bit more. We have this consolidation in middle of April in our gold charts. So we can actually use that as a reference point. We can say that this area here, could represent it represents support levels. It could represent a demand zone. Okay. All right. So potential buy areas there. We've had a bounce of your 32.89 price point before. If you look at your chart, we did ease off to this level before, and then that surged to our latest historical highs. So we are at an interesting point in gold already. I am not convinced that this is something that I should be buying into immediately. After all, if you look at your chart, you do have those really bearish hourly candles. Look at the size of the body of these candles compared to your bullish candles, very small bodies. So sentiment is bearish, but we are at a support level. The big question mark for us is, will this support area, 38.25 retracement, 32.89 hold? So what should you be looking for? Well, when it comes to entries, I always like having signals that tells me the market is about to reverse on you. So if I were to start seeing hammers here from 30 to 89, or again dragonfly dojis, then that would be a good place for me to go buy this thing. Okay. Other than that, what are other situations where I would consider going long from this area? Okay, if we can consolidate over the next couple of hours, meaning sideways action, perhaps very tight candles, just play this area here, and then we get an engulfing candle later. Now that would be a good buy. What about if I get an engulfing candle now? Um, at this point, I really think that it's still too early to go long on an engulfing candle for this R. We don't normally get to see that kind of quick reversal. Consolidate first. Maybe you have nice bullish candles later in the hourlies to signal that this chart is ready to go back up already. Sell side, I hesitate taking the sell side simply because we know that the market is driven by concerns over US policy. So I'm not willing to jump short. If there is a break of 38.2 fib, then I'd look at a bounce off this area. And again, I'd fall back to seeing hammers or dragonfly dojis in the lower time frames coming from these levels, 38.2 fib, consolidation and resistances, 50 fib, support. So these are price levels that I am willing to take the buy side of gold, but I'm not in a position to take any immediate action. Now guys, if you take gold, again, this is all about what the US is doing, specifically what Donald Trump is doing right now. Over the past couple of days, the past week, we've actually seen supply demand related news for gold, but it didn't really have much of an impact on the market. We had a report before about a new gold mine in in China. Okay, but again, market ignored that. We did not crash in gold last week when we heard those news. We actually rallied when we heard those news. So no immediate action. I'd say look for hammers or consolidate and then get an engulfing breakout. And only at that point would I consider gold to be something that we can buy already. So we are bullish in gold. We are currently seeing a pullback in gold. We are currently testing a support level in gold, but we do not have anything in our chart that tells us the time is right to go buy your gold already. All right. So enough with gold, and let's take a look at my usual trade. My usual trade is the euro. So let's see what we have for euro. I have highs for euro at 14.25, lows at 13.07, so definitely a big move already. Let me just see what your ATR is. ATR for euro is about 142. So we are below the average to range for euro. But we've seen a big, a big price action already. In fact, we've pulled back a bit. What does that tell us? Hmm. We were viewing that 1500 level before as a good rejection point. We were looking at the euro before from the lens of your weekly chart and saying that 1500 was a psychological price point, and we also had some consolidation resistances around 1500 from back in 2022. So you really have to go all the way back to find some reference points in your euro chart. Okay. So what do we know, folks? Well, it's just Wednesday. There's no need to talk about position squaring or profit taking just yet. I am coming off overbought levels in my stochastics, but okay, here's the thing. Normally, if you have a trending market, oscillators like your stochastics will tend to just go in and out, in and out, in and out of their overbought levels. So just because my stochastic is coming out of 80 is not enough to convince me that I should be selling simply because our trend is bullish. And we normally get to see our stochastic indicator just going in and out of overbought levels when it's trending. Okay, so let me try this out in the lower time frames. 4-hour charts, you actually have a hammer in the 4-hour level. Um, Anything here that says go buy already? Not much, not yet. I mean, nothing here that tells me that there's momentum for the buy side. Let me draw Fibonacci retracements. Looks like you actually had 38.2 fib retracement and then a bounce of 38.2 fib retracement in euro in the process of happening already. 38.2 fib retracement is that, sorry, let me just adjust this. 38.2 fib is at 1330. Working rate is at 1386. You have signals of a potential bounce, nothing that says go buy your euro immediately. Let me go hourlies. So very tight consolidation over the past couple of hours. This is actually one of those instances when I would say a straddle would be a good idea. Now, what's a straddle, guys? A straddle is basically putting a straddle is basically putting a buy and the sell, and you just wait which of these two sides gives way. Will bulls come in, take out the consolidation resistance, and start a new upswing, or will bears come in and drag your euro back down to 38.2 fib level? By the way, at 1382 and 38.2 fib at 1330, you're actually talking about a decent number of pips if there is to be a bearish breakout in your euro charts. So, are we gonna take a trade? That's, I guess, the big question. Uh, well, I said that this is a straddle for me. Um, we don't have much momentum. We do have that 4-hour picture telling me that there is a bounce that's going on from 38.25. I'd say, okay, let me just put in a buy stop. So what's a buy stop, guys? A buy stop is basically an order that says, okay, um, you give me a buy if the market is already moving in this direction. I don't want to wait, monitor the charts. I don't want to do that. If I get to a certain price, let me in. So that's what we'll do. So hopefully we get momentum when this buy stop gets triggered. Ideally, your stop loss for this should be below your consolidation lows for the day. So where do we stand at this point, guys? We are looking for euro to regain ground. We actually have indicators telling us that we should be looking for a bounce already from our pullback to the 38.2 retracement level at 1330. So for now, guys, I'm not in a position to do anything immediate. We did place a buy stop at 1425. Our objective would be to try to at least test these consolidation lows from Monday, yesterday's Asian session, Monday's North American trading. Of course, Monday you had much of the European markets absent. So no immediate buys, guys. Let's just see if we can get the momentum going for euro later and trigger those buys, get ourselves near this consolidation floor from your Monday New York trade, yesterday's Asian trading. But let's move on and let's see where else should we be going. We're taking a look at gold. We're taking a look at the euro. Cable looks about the same chart. What about the Australian dollar? Okay, not really my cup of tea, to be honest. But where do we stand here? Let me draw fib retracements. So we're actually testing 50-fib retracement level of that sell-off from October of last year. These are weekly charts. We're in the process of taking out the highs in Aussie. What else is there for us in this chart? Our sell-off from before, again, was mostly driven by US policy. Aussie, what do we have intraday? Let me see the daily charts first. So big rally, big spike. Again, this was courtesy of Donald Trump when he floated the notion of firing the the Fed chairman, Jerome Powell, only to just reverse it. So not in a, we're not in a position to do anything immediate here. We actually had that ongoing bullish break from the previous hour. Huh. We can say that you have a good inflection point around this region, around 6400. So potentially we could be talking about looking for buys at that point. What do we mean by looking for buys? Basically, we want your long-tailed candles. We want candlesticks like this happening here, so that I would consider going long in gold at that point, or rather in Aussie at that point. So overall, guys, I'd say that we've basically been playing a range in Aussie. Anytime you get near your previous consolidation price points is a time to consider taking the buy side. So no immediate action. What about selling this? The thing is, I don't really trust Donald Trump to give me a good impetus for selling this chart. Although you could argue, well, okay, let's put it this way, guys. Nice bearish engulfing or shooting stars or gravestone dojis coming from your 6420 area, 50-fib retracement level, and we might consider taking the sell side. So no immediate action, guys. I especially do not want to go against a candle like this. Very strong body. I'm actually tempted to think, what if I get a long tail in the hourly charts for Aussie? Would that be enough for us to consider going long? All right, guys, let me get back to overview. So unfortunately, we're not really in a position to do anything immediate. For now, we do have a buy stop in euro. We placed that buy stop at, oh, good thing we took a look at this. I used the wrong volume. So no immediate action for us at this point, folks. Again, the only thing that I really like trading is your euro, and for now we just have a buy stop in euro around your 14.25 area. We're quite a ways off from it actually, about 30 pips away. Alrighty guys, so waiting game in euro. I guess for much of the market really at this point. Lately, the big moves have been from the European and the North American sessions. Anything else that looks interesting? You have that. Okay, let's take a quick look at Japanese yen. It's been a while since we've been at these levels for dollar yen. Okay, we were around the 140s level last in September of last year. So what do we have, guys? Let's draw some fibs in your latest downswing. See what does that tell us. 23.60 retracement. Nothing really, not really a steep retracement there. Let me go intraday. How does that, if you just look at this candlestick and I'm thinking this is really pretty bearish here. But let me go lower time frames. Not much of a pattern there in that 4-hour picture. Hourlies. Okay, you have an attempt to break out of a consolidation. So technically you should be considering selling this at this point. Unfortunately, one of the problems that we have now, folks, is that this is really a dull time for dollar yen. You've got Tokyo closing, and U.S. markets are still hours away. Not a lot of people would want to wait for 6 hours and do nothing. Okay, so I guess we'll just wrap it up at this point, guys. There's not much happening. Perhaps the market's waiting for fresh catalyst, something new out of the mouth of President Donald Trump to move things. At this point, it seems that there's been a realization in the market, or at least in the Trump administration, that they've created so much turmoil, and that turmoil has led to demand destruction. So guys, um, I guess we'll just leave things at that for now, and I hope to see you on Friday. Unfortunately, there's really just no immediate trade available for us, although we are looking at our euro and we're saying that okay, break the highs of your consolidation and we can do something. You know, you can actually consider this to be a flag pattern, and if you are, then you look at this as a the target of that flag pattern. So again, guys, thank you for joining me, and I hope to see you on Friday.